Sabharwal joins us now. Let's connect with him and understand what he makes of the current market setup, where is he picking his spots, and how excited he is. One of his stocks, Titagarh, has almost doubled in less than 1 year. So, Sandip, what do you want to start with? Titagarh, the jackpot which you hit in last 1 year, IT, what's happening there, or something else?
Yeah, so the railway investment theme is a strong one now. The key is to identify the stocks which can benefit disproportionately because of that. Titagar, we invested initially because of their success in the wagon orders, which will be spread over 3 years. So, many of these companies had invested hugely many years back in the anticipation of large railway orders, which never fructified. It led to them making losses, etc. But things are turning around. Things have turned around, and things have turned around in a manner where the growth profile has completely reversed and completely changed. So from that, they moved forward to getting more metro orders, wheel orders. Recently, they got huge wheel orders. So there's a paradigm change in the growth profile of the company, and to that extent, that's getting reflected in the stock price. Now, uh, it's tough to estimate till what price such stocks can go because the growth cycle is just starting. So initially there is no ownership, so the movement is very fast. Then I think such a big move has happened. There could be phases of consolidation, etc. But given at the overall outlook, next 2-3 years should still be very good for them. On technology, uh, results are and commentaries are in line with expectations. So, and there is a definite slowdown, and many of the IT analysts are now recognizing that the slowdown could actually persist for the following year, also not only this year. So, I think, but that's not built into the stock prices. So, it's a dynamic situation. We want to buy these large IT stocks at some stage, but I think we can still wait out for maybe a quarter or two.
Okay, Sandeep, hang on there.
If I have to stay with IT, it's time for us to look at the sequential comparison. TCS, Infosys, and HCL Tech. 3 are out, 2 are left, which is Wipro and HCL, Wipro and Tech Mahindra. Tech Mahindra becomes a special situation stock. But the maximum downgrades, and there you go, I think that's purely a function of what companies have reported. The maximum downgrades of anywhere between 10 to 20% plus have come for Infosys. For HCL Tech, that's not the story. The sequential growth in Infosys has been poor, pathetic, horrible, and terrible. Yes, that's been the story for Infosys for the quarter gone by. The margins have contracted. The guidance has been poor. YTD change for Infosys now is about 20% down. For Tech Mahindra, for HCL Tech and for Wipro, that really is not the story. Sandeep, is it an Infosys specific problem? Mastech numbers yesterday weren't bad. HCL Tech is just about okay. So it is not like a linear trend in IT. Yes, IT is going through a period of pain, but it is not universal.
So because what happens is that there are specific companies which are their specific projects or businesses, so they will stand out. So that always happens in any cycle in any industry. Even in the pharma down cycle, there were some companies which continued to do well. So it happens across the board. So, but the IT spending reduction is a reality, and that is going to affect all the companies, even those which are giving bullish guidances and those which are giving conservative guidances. So, just because a company gives a bullish guidance at this stage, uh, I don't think people should be jumping in to buy those stocks because eventually this slowdown is going to catch up with all the companies. So companies which are excessively optimistic at this point of time, we should be careful about them.
Okay, Nifty is beginning to settle in at because we've got a weak handover from the global cues. Asia as well is pretty sideways and in the red, and that's exactly what the SGX Nifty as well seems to be indicating. Actually, I stand corrected. It's seen a mild pickup and it's now indicating an absolutely flat start. Flat is how we shut shop in trade yesterday too. There wasn't any much of a difference. But Sandeep, two important earnings, 10% plus weightage for Reliance, 8% for ICICI Bank. What do you hope to hear from both?
Let's hope that both of them give positive commentaries. So I think what's going to happen is that if for Reliance, somehow this time the expectations seem to be very low given looking at the stock price movement. So to that extent, it might be tough for them to disappoint. So I don't know what's the reason of such pessimism in the near term, but let's see. I think telecom obviously is a place where the profitability improvements are not happening at the pace people expected because Reliance Jio itself has been resisting taking tariffs up while other players actually wanted to go up. So I think that's one aspect which is concerning. I think people have some concerns on retail because of the slowdown in consumer demand, what most of the other retailers have been talking of. So I think those are a few concerns. The petrochemical and refining business incrementally should see improvement. ICICI hopefully will see good profitability, and I expect them to do well. So the question again for many of these large cap banking stocks is that in the near term whether there is upside given the fact that they are more near 52-week and all-time highs rather than having corrected most. But overall, my construct for the larger banks is still positive in India.
The other space which has sprung up is pharma. While all of last year it was just about Cipla and a DRL, now you're beginning to see much larger a participation come in from pharmaceuticals. Just the other day after an EIR nod, even a Piramal Pharma, which has been a rank underperformer, shot up at about, percent or so. Wanted to understand whether you're, buying into any of the pharma names yet.
In pharma, like I've always said, that our exposure is limited to Sun Pharma and Dr. Reddy's because I think that's where we have more visibility, more comfort in the management, lesser concerns, and valuations. Although Sun Pharma valuations are not as cheap as they were 2-3 years back, but they are still not so expensive given the way they've been doing operating and reporting results. Smaller pharma companies are more speculative, and there I don't see a big story in any of them. Most of them are doing excessive capex, which eventually goes to hurt them, etc. Cash flows are not there, so I think such speculative moves will keep on happening, but there's no big story.
All right, now let's get a list of stocks which are at a 52-week high.
Up once again, right? I mean, we've seen sporadic moves come in on a Nestle. ITC, of course, is sitting at a fresh high. We've seen Britannia as well make a move, and a lot of news flow as well is being generated within the space. Anything that you like?
Yeah, so FMCG is a space where people are no longer positive from being very euphoric a couple of years back. So I think that always gives opportunities because that creates an opportunity to buy them at lower than historical valuations when the earnings are also not so good. So there are some positives which include lower palm oil prices, which leads to improvement in profitability of many of the soap manufacturers. Or input packaging prices have crashed, so that helps most of the companies. So I think some of these benefits could be seen as volumes recover. Volumes have been subdued. So among the FMCG companies, after the correction, I think Dabur is well placed. We've been buying Bata at lower levels continuously because I think that's one place where the stock satisfies my criteria of a 35% correction from the top, and that usually is a good level to buy many of these consumer names which have got strong brands. Godrej Consumer is at a high, but that's a company which has consistently said over the last few months that their performance is actually going to sustain and improve. That's another company which could do well.
I want to look at a stock which which was like the stock, Sandeep, frankly, in last 1 year, have not done badly despite this criticism that they are expensive, महंगे हैं. You don't make money when you buy stocks at P multiple of 50, 60. But looks like Britannia and HUL have proven naysayers wrong.
These are done well, which have shown margin resilience and also sales resilience. So the stocks you talked of, especially HUL and Britannia, have been able to do that, and that's what is getting reflected in the stock prices. On the other hand, on an overall basis, FMCG has not done as well, and many of the more fancied FMCG companies have actually corrected sharply. So I think that's the opportunity. Some stocks like HUL, etc., still remain expensive. They are always expensive. And you play them for 10-15% kind of returns. It's a better strategy to buy them when there's some negative news, negative result, they suddenly fall, etc.
Okay, couple of other stocks which are going to be in focus. Of course, earnings reaction coming in from HCL Technologies. The margins, or rather the earnings, are in line. I think the bigger positive is that there is no apparent bad news. While it's not a big beat by any chance, but at least the bad news is a miss. And they see the FY24 margins at about 18 to 19%, constant currency revenue at about 6 to 8%. So HCLT is going to be definitely one stock in focus. And Cyient has been the impressive one. Yesterday was Mastech, today could be Cyient. In terms of a buzzer, the Q4 dollar revenue growth is above estimates at about 8.1%, and the FY24 guidance is in line with what the street was anticipating. The disappointment has come in actually for names like Sterling and Wilson, for wherein the losses have expanded to about 417 crore rupees. The revenue downtick has come in at 22%. LIC, for instance, where the March premium is actually down 32%. The retail APE is up about 10% on a year-on-year basis. Sandeep, what happens to, names like LIC? Because people have so badly burnt their fingers, whoever subscribed to the IPO. And since then, the stock hasn't recovered ground at all.
Yeah, so I think one would have expected that after the severe sell-off at some stage, it will come into value zone. But then first, another round of selling came in when entire Adani issue came and the exposure to Adani Group came out, where I think much of the losses they have actually recovered. And then there have been again this news flow which indicates that they are continuously losing market share to the private players. So that doesn't create any sustainable long-term story in the stock. So it will become very cheap at some stage. There will be some technical, etc., bounce backs, but overall there is no big story.
Always good to have you on the show. We'll let you go on that note. Good chatting with you as always. But HCL Technologies, we were just chatting about the numbers, broadly in line.